Let's take a look at first quarter earnings from Chegg, just out. And they were a little bit better than Wall Street expected, but we're not going to go much deeper than that. We can do that. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. When we look at the quarter that Chegg delivered, it's kind of in line with what Wall Street, I guess, expected. $174 million in revenues and a loss of about $6 million. But frankly, those numbers are just a lot lower than Wall Street once expected from this one-time COVID darling. The big news from Chegg is that this technology company, a Silicon Valley technology company, is seeing a change in leadership. Dan Rosensweig, who's been the CEO of this company for 14 years, a beloved character in Silicon Valley, certainly one of my favorite CEOs, is leaving the company. He's not leaving the company, he's going to become executive chairman, but a new CEO is stepping in. Nathan Schultz, who's been there for 16 years, most recently as the chief operating officer, is now stepping up to be CEO effective June 1st. But we're digging into the business a little bit deeper here. What we saw is a business that's trying to make lives easier for college students by supplying them the things they need online. Well, that was a great business when COVID happened. It's the worst business since COVID. And the COVID hangover from Chegg is real and pronounced. And while revenues have kind of hung up from the elevated levels near COVID, they've been kind of sliding a little bit on a year-over-year basis every single quarter for the last year. And that's been painful for this business. Total net revenues of $174.4 million. That's down 7% on a year-over-year basis. Subscription revenue is most of that at $154 million. And their net loss, as I mentioned, $1.4 million. Not great for this business. They're cutting costs, is particularly in sales and marketing. That's actually as a percentage, it's not only down $7 million year over year in the quarter, it's actually down as a percentage of revenue. So even as revenues fall, they're cutting sales costs faster, but you can't do that forever. Now, this company starts to talk about the future of education, of higher education, is really going to be focused around STEM B. What is STEM B? Science, technology, engineering, math, and business courses. And they say that the majority of U.S. college students are taking those classes. Some of them are from my very own home taking those classes. But the result is they're going to have to adjust their product portfolio. They're going to have to really delve into AI in ways that they haven't quite yet. And maybe that's why they're making that management change right now. So how did the stock react when the news came out, the numbers came out? It sold off. Sold off in after hours. Not a lot, from about $7.25 to about $6.77. It's not a significant sell-off, but let's look at a 5-year chart. It's just painful. The stock was trading at $110 a share during the pandemic. Now it's below 10. So really painful. This year alone, down 38%. Interesting comments from Dan Rosensweig. He sounds super bullish about the company, where even though he's stepping away as CEO and going to become the executive chairman. Here's what he had to say.
The company has gone through a series of transformations since we've been here for the last 14 years, from almost going bankrupt several times to a point where we're profitable and generate free cash flow. The AI opportunity is so powerful and has the chance to be so big that having this new team in place to drive it for the next 5-10 years is exactly what we want to have happen, because the TAM should expand, the margins can expand. And so we want this new team to really take this and drive it. And after 14 years, I thought this was the exact right time, so did the board, and I just couldn't be more proud of Nathan. I mean, I'm really excited about the company's future, and I will be remaining involved with Nathan. And so let's go.
So he's going to be somewhat involved, but no longer the CEO. The residents of Montauk should be happy about that. Hopefully we'll get more time out there. All right, I've got one number that's really going to summarize all of these results, your takeaway, the drill down earnings bite, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Q1 earnings from Chegg. Here's what you need to know. This company is falling and falling since COVID, still not quite able to get their share price or their business as big as it was. The business is close, the share price, not so much. revenues in the quarter of $174.4 million. That's down, as well as a loss, a $6 million loss for this company. And the CEO stepping down, Dan Rosensweig, after 14 years, is going to become executive chairman, and just that, as the COO steps into that CEO corner office gig. All right, the number you want to remember about these results, -7%. The post-COVID slide continues in revenues for Chegg, where we've seen negative revenue growth going back 2 years or so. Not terrible slide, but a slide continuing and painful for the folks at Chegg. All right, thanks for listening to Drill on Earnings. Check me out on all the socials. Leave some comments. Tell me what you think. Drill on Earnings, part of 6.5 Media.